Greg Engel joins me now, CEO of Organigram Holdings, Inc. Greg, welcome back.
Thanks for having me today, James.
Greg, it's been a tough few months in the cannabis sector, but Organigram has not only demonstrated that it's plowing forward and developing, getting ready for Cannabis 2.0, but you're also attracting the attention of a lot of analysts who are still writing quite favorably about you and have projected higher prices for the company going forward. So my question, I guess, that we'll build this conversation around is, what are you doing to get the analysts to put such big targets on your price going out?
You know, I think there's a couple key things. One is we've got a proven history delivering when Rec 1.0 launched. So, and I think when people look to 2.0 launch, that's one of the considerations is, are companies ready? What's their plans? What's the strategy behind what those products are going to be? So we're very focusing on the high volume areas with vape pens as our initial launch, and then we're going to have a phenomenal range of chocolates available in Q1 next year. And then we've got a really unique offering in terms of dissolvable powder for beverages. So I think that's one, is looking at how have you delivered and what's your strategy for 2.0. I think the other is when you look at the cost base of the company. We had some hiccups in Q3, which impacted our revenue and our gross margin in Q4 in terms of production, but those trends have been reversed, and now we're delivering, again, we're producing at a cash cost of 66 cents per gram and an all-in cost of 93 cents. So arguably putting us in one of the leading positions in terms of the space from a cost perspective, which as an indoor producer growing a very high quality product is a great position to be in. And I think when you look at companies going forward, costing has to be part of it. What are you spending on SG&A? What's your operational cost? But what's your cost of production as well? So I think those are two of the key things that analysts are looking at when they're looking at kind of who's ready for the future and who's going to deliver in the future.
Sure. At that cost basis, you could even afford to compete with the black market.
Yeah, I think, again, I got asked this question on our earnings call yesterday and about, who's our competition. And I look at, I don't look at the other companies in the market. There's a massive market out there in terms of, the existing illicit market. And I think the way for us to compete with them, I don't necessarily think cost is the way to go after it. I think it's differentiated products, delivering on kind of an improved cannabis experience, especially when they get into the 2.0 products. What are you going to provide and what are those products going to offer? They're going to differentiate you, because at the end of the day, that's sustainable, right? And I think products like, as I said, our dissolvable powder for beverages is a way to differentiate ourselves and deliver an experience that's different. Because with that formulation, based on the data we have on the formulation, we believe the onset of effect will be 10 to 15 minutes versus a traditional edible or beverage, which is 60 to 90. And so people are going to be able to measure their effect more effectively, and then also gauge whether or not they want to take more in the 2 hours out or something. So I think that's going to be a big way to compete with the illicit market.
So then, does Organigram envision not competing on price? Like Hexo announced their $4.50 price range product, which is obviously geared to go head-to-head with the premium dried flower. You're saying Organigram's strategy is not to engage on that direct price competition basis, but rather to focus on differentiated products that the black market simply won't have available.
Yeah, I mean, that's been our strategy from day one in terms of quality flower, as well as, of course, and we're fortunate we have a good partnership with the Green Solution out of Colorado. So we see, not only state level data, but we actually see store level data for what's happening in that market, and that's the most mature market in the space. And what we see is, selling an ounce or 28 grams, it's a very tiny fraction of who's buying, right, in terms of the marketplace. So, it's more important to make sure that you're delivering a product that has a great consumer experience and having that differentiated product. We have a range of products. We're certainly competing in kind of the value range, but really our core is in the mainstream and premium side, and that's where we're focused.
Sure. Have you undertaken any sort of projection as to what percentage of your revenue in the future will be derived from the Cannabis 2.0 product category?
I mean, certainly, again, we look at U.S. state data, and our understanding is that dried flower and pre-rolls and that whole side of the market still, in a mature market like Colorado, has a 45 to 50% share. So derivative-based products, primarily vape pens, as well as edibles, have a 50 to 55% share of the marketplace. So, certainly we expect, with the products, and that's why we went in the categories we did, right? Vape pens, we know, are 25% of the market in the U.S. states. Edibles are 13 to 15%, and then kind of the other categories fall off pretty quickly, small percentage points. So we wanted to compete in the leading categories, and as I said, our beverage tech is one that we believe is a bit of a disruptive technology versus the other companies who are going into beverages, because they're going to have challenges with shipping and storage space, especially in today's legal stores. When you look at those points of retail distribution today, they've got limited storage space. So all of a sudden carrying beverages that are taking up a lot of space is going to be a challenge. But we believe with our dried powder that it's going to be a discrete offering where people can take it to a party, take it to a social event, but also take it to a sporting event or a concert or anything and add it to the beverage of their choice. So it gives a lot of flexibility.
That's interesting. Do you envision that the edible segment is going to be subject to overregulation in the same way that premium dried flower was in terms of packaging and advertising and promotion?
Yeah, it's going to be a challenge. I mean, certainly what we've seen is that the packaging is going to be very similar. We're going to have child-resistant packaging, which in fact is actually more applicable though in edibles, right? I mean, certainly, one of the kind of confusing facts going back to Cannabis 1.0 is I don't necessarily support that we ever should have had to package dried flower in a child-resistant package, because what can you do with that product? If you eat dried flower, it's not going to have any effect on you, right? So there's no risk, but there is a risk of consumption. So having having edible products in a household where there are children, it's important to have, especially young children, having child-resistant packaging. But, the biggest challenge still continues to be our lack of ability to market and differentiate these products, right? So we're going to be dependent, as we are today, on the staff in the retail environment, and that's why retail build-out's been so critical, right? In the provinces where we've seen retail build out, those staff are in a position to actually talk more to the consumer and talk to them about kind of what's in the product. And I think it's going to be important. We rely, as do other companies, on online reviews that people will make of our products, and I think that's going to be important as well going forward. So you want to deliver on a quality experience up front, and then people are more likely to post reviews about your product, which I think is going to be key.
The province of New Brunswick elected to privatize its government-run cannabis retail business, and it immediately occurred to me that, I wonder if Organigram is going to make an attempt to take over that business. Has that occurred to you guys at all?
So we're not a vertically integrated company today. We don't have retail experience, but we certainly have been approached by a number of different retail partners possibly about doing that. So, certainly, to be frank, I think supportive of whatever plan the government wants to make, but they made a decision at a time when their retail footprint was just about to turn profitable, right? And so, I think they're in a position where they're looking to say, can we bring in a more proven retailer to kind of help us with this? But, so I guess I would say we're open to participating in a partnership with an existing retailer, whether or not that's a retailer who's in the cannabis space or someone who isn't today, right? I mean, New Brunswick is an important market to us, and I think we have to consider that. We haven't made any final determination of what our plan is going forward.
The involvement of the government in the commercial sale, or the retail sale rather, of cannabis products has come under a lot of criticism by market participants, and a lot of people point to California and Alberta of examples where less government participation means faster path to profit, greater access to product in the legal sense for all of the customer base. Do you think that's a fair criticism, that government perhaps shouldn't be in the retail side of the business?
I think it's really dependent on kind of how it's rolled out, right? We've seen, the experience in Quebec is very positive, and certainly the stores that are there. Same as in PEI and Nova Scotia, where the government stores have done a phenomenal job, and the consumer experience there is great. The access to products is great. I think where one of the early concerns, for example, with Nova Scotia from a federal government was co-location with the alcohol beverage, and I think we've seen that that's not really had an impact in terms of increase in impaired driving or anything like that. So it depends on the model, right? It really depends on Alberta's done a great job, and the other companies, the other provinces that have gone with private models in Western Canada. We're seeing strong rollout and strong consumer experience, but in Atlantic Canada and in Quebec, where we've seen government participation, and the Cannabis NB stores in New Brunswick, were great stores and great experience. is they probably just started with too many stores for the supply that was available at the time of launch. And so if they had started with 8 or 10 and then scaled up as more supply and the 2.0 products came online, I think then from a profitability perspective, they may have been in a stronger position. But I know you've been to the stores in New Brunswick. It's a great experience when you go in. You've got staff that are focused. They have a high level of knowledge. So for the consumer experience, it's a positive side.
Yeah. All right, Greg. Well, that's an awesome update. Thanks so much for joining us today.
Great. Thanks for having me, James.